9. Mutual bank. The mutual bank. The essential features of a mutual bank may be outlined as follows. 1. Mutual banking associations shall be formed to do a general banking business and to issue bank sheets for the use of their members. 2. Members of such associations shall, upon admission, bind themselves in due form to receive the sheets issued by the association from all persons, in all payments, at par. 3. The associations may issue their currency sheets as loans to their members to circulate as money among them and such other persons as are willing to receive it. These sheets will not be legal tender. 4. Any person may become a member of any association and may borrow the money issued by the association, by giving his promissory note therefor, and by pledging property or future production or notes to the association to secure the payment of said note, or by having his loan insured as hereinafter provided. 5. Loans may be made for an amount not exceeding 1/2 the assessed value of the improvements situated upon the real estate pledged, or in an amount not exceeding 1/2 the value of goods, chattels, implements and machinery used in productive enterprises, or upon shares of stock of such enterprises, and upon warehouse receipts. The period for which loans shall run shall be determined by the marketability and possible depreciation of the security offered. 6. Loans may also be discounted by the association, for those who have no property to pledge, upon the payment of a sufficient premium to insure the risk with an authorized insurance company. 7. The rate of interest shall always be 0. The charges for which said money shall be loaned shall be determined by and shall just meet and cover the losses sustained and the expenses of the association. 8. Members, by paying their debts to the association, shall have their property released from pledge, and be themselves released from all obligations to said association and to the holders of its money as such. 9. Wage workers who are willing to receive the money of the association in the payment of their wages may deposit the same with the association subject to check. 10. The money of the association shall be issued in denominations of 1, 2, 5, 10 and 20 rupee bills. At least 1/2 of the issue shall be in the first 3 denominations. 11. The check, draft, bill of exchange and travelers' checks may be adopted to facilitate exchanges between the various members of the associations and between the associations themselves in specific part of India only. 12. Associations may form clearing houses in a city where there is a branch near the center of population. Offhand, there seems to be a risk connected with the acceptance by the mutual bank of all kinds of property as security for loans. But, in reality, the risk will be very slight. If a member of the mutual bank should fail to redeem his note at maturity, the property he has pledged will be sold for current money. The auctioneer pays to the bank in the amount of the note, which gold the bank will then hold, in order to redeem with it an equivalent amount of currency. The balance will be paid to the debtor for his equity. Under our present system, with all its uncertainty, a foreclosure will not take place once in 500 instances. Under the system just outlined it will happen even less often. About 2,000 rupees in gold coin is all that would be needed to protect a lakh of rupees in loans. And even this amount can be dispensed with by insuring the risk with a reliable insurance company. In general, the advantages of this mutual bank will be, mutual bank sheets being secured credit, will take the place of unsecured credit, and, in consequence, credit losses will be practically eliminated. Usury and interest will cease, and only the costs of issuing, securing, and carrying mutual bank notes will be charged, amounting to less than 1%. Mutual bank sheets, by their very nature, cannot depreciate. On this account, and because there will always be enough mutual money for all industrial and commercial needs due to the flexibility of the issue, there will be no more money panics. As money will be easy to get under the mutual banking system, sound enterprises will have no difficulty in getting financed. This will eventually mean the disintegration of monopoly. It will also mean the creation of many more jobs, and consequently competition among employers for workers, resulting in increasingly better conditions of work-land play, until at last the worker will receive the full product of his labor. Mutual bank in operation. Let it be assumed that the mutual bank has been established and offers credit at the cost of operating the bank, which is about 1%. This will be the full rate charged on all loans. This rate comes into competition with the rate charged by all other banks and all other money lenders. The effect on the other banks will be felt very soon, because no one is going to pay 6 or 8% for money when he can get it for 1% or less. One of two things must happen. The old banks must either meet the cut and also lend money at that rate, or else lose their customers who will go to the new bank. The new bank needs no capital, as it does business entirely on the capital of its customers, who are also its members. For every member virtually brings his own capital to the mutual bank when he joins it. The business the mutual bank can do is unlimited, and each new member joining the bank increases the number of people who can do business with each other on this new basis. The circle of exchange becomes wider and it cannot be long before the whole communities is impelled by self-interest to do business on this plan. Once the mutual bank is operating, money will be available practically without interest to any responsible producer, so that his independence will no longer depend upon the whim of the usurer, but upon his determination and his ability in his line of work. There will be big factories and small shops, and the demand for wage labor will be greater than the supply, with the result that wages will soar until they approach the full value of the work done. Due to the elimination of interest, rent, and privileged profits, under mutualism the cost of commodities will be much lower and money therefore will have more buying power, in addition to wages being higher. Is this not a condition worth working for? Once the mutual bank is established, mutual exchange will permeate all society and demonstrate everywhere the benefits to be derived by adhering to the cost principle, so that society may at last move in the right direction. For the inauguration and successful operation of the mutual bank, a considerable number of representatives of diversified industries would be essential. The organization of such a group must be the first task of those who wish to put that phase of mutualism into practice. The cooperatives have such an aggregation already at hand, organized and trained in associative effort. Here, then, a beginning can be made, if such associations can be brought to perceive the immense benefits to all society to be derived from this extension of their principles. These associations have the psychological foundation and the mechanism for the purpose. Mutualism offers them this opportunity and assures them of its hearty cooperation. The methods of approach for the credit group of organizations must, by now, be self-evident. Money and insurance at cost, occupancy and use, as essentials to land ownership. Adherence to the law of equal liberty. And voluntary association, no compulsion for the non-invasive individual, all these are tenets of mutualism which can never be emphasized too strongly. All things which make for the maximum of individual liberty compatible with equality of liberty are part of the mutualist program, no matter from what quarter they are tendered. And, per contra, anything which limits the liberty of anyone below the point needed to retain equality of liberty is a danger to the individual and therefore to human society as a whole, and in consequence is rejected by mutualism. Liberty is the first need of man. For liberty is, as Proudhon so well stated, not the daughter but the mother of order.